All right, welcome everybody. I have an amazing guest today. We're here with Renee, or as many of you may know him as Fallacy Alarm on Twitter and Substack. He gives deep and thorough analysis on lots of companies as well as macro frameworks, and I'm really excited to have him here today to discuss Tesla. We're going to talk about how he sees the story playing out from now until 2030. So, welcome, Renee.
Thank you, Vinny. I'm glad I'm here.
Happy to have you. So, I guess before we get started, just want to ask, who is Renee or Fallacy Alarm? Introduce yourself.
Um, yeah, well, I write a blog or newsletter on Substack called Fallacy Alarm. I started that at the end of 2021 because I always enjoyed investing and do my own research and write about it. But at some point, I felt like it might make sense to share that with other people. And it just started as a hobby, but then, lots of people liked it and it grew a lot. So yeah, as it grew and grew, I, I started to spend more and more time on it, and I've been enjoying it a lot. Kind of a mix of single stock research and also macro research, because I think there are some people that, or most people focus on either the stocks or the macro, but for me, a comprehensive and robust investment process requires both. I just want to have comfort from both perspectives. So yeah, I'm just pursuing the questions that I ask myself, and then people can just piggyback my journey and learn from it, hopefully a little bit for their own journey.
Awesome. Well, I'm super excited to have you here. I've been reading your work for probably at least a couple of years now, and you've made some great calls, and I know that you know what you're talking about. So definitely excited to see what you think about my favorite investment, Tesla. So originally, I had a bunch of questions written out here, but upon reading your latest article, I figured we could just start there because I think it really paints an all-encompassing picture of Tesla and how we might expect this story to play out over the next few years, up until and through 2030. So I figured we'd start there. I'd love for you to take us through your thought process and how you think about Tesla.
Sure. Yeah. Maybe I can share a couple of slides here from my article so that your viewers have visual background, and we can share my screen.
Perfect.
So hopefully you see now a tweet here from Gary Black.
Yep.
Yeah. Um, so Tesla is today a hardware business, right? Every quarter we worry about how much metal are they shipping in the form of cars and energy storage products, and then what's the average selling price, and what's the margin there, and how can that grow in the future, EV adoption, market share, and so on. And I think that's valid. I mean, it's probably far north of 90% of their revenues and earnings and market value. But I think over time, this story will shift a little bit. And I think they will move from this volume times ASP model into let's call it a fleet times average revenue per user model. And that's, by the way, not something overly revolutionary. If you think about the big tech companies, right, they operate businesses like that. They monetize users. And even the car manufacturers, they do the same with their aftermarket business, with their financing business. So a company with the ambition to be worth like multi-trillion dollars, I think over time needs to offer a little bit more than just shipping physical products. And that's why I believe over time Tesla will morph into such a story as well. And the article that you referred to, actually a screenshot from that article here, that shows their current and future product portfolio, right? So Tesla in 2030, how could that look like? So they have obviously the transportation and the energy business units. And then within that, they sell hardware, and then they will also sell software. So what I first talked about here was the automotive and I call it here the mega pack, because that's by far the most important energy storage product. That is right now the most important part of the business. But then in the future, they will also sell software and insurance and financing solutions. And I believe that this will, by the end of this decade, I totally think that this can generate 10 to 20% of their revenues and profits. And then the whole story, the theme here will then shift a little bit over time, and this And I think over time, we will worry less about the gross profit per vehicle than what we do now.
Right. Yeah, I can
Yeah.
definitely see it playing out like that as well. And one of the things that I definitely related a lot to the way you look at Tesla when you look at all these different segments, and then we throw in things like full self driving. I think you, like myself, are kind of like a grounded bull. Like I see full self driving as something important. It's going to make them a lot of money. I think people are going to start to see the value, but I don't necessarily factor in things like robo-taxi. But I am excited about what you have here, like with insurance. I think that these are things that are largely getting little to no credit today that are going to make up more and more of the business as this company really moves to something like what we've seen with Amazon, where they're just doing so many things. They've got their tentacles in 10 different industries.
Yeah, for sure. And I sometimes I like to think about Tesla, for lack of a better word, I like to think about them as sort of a battery refiner. So the battery will be a very important economic good in the future, and they are wrapping products, hardware and software and services products around the battery, and they create value in doing so. And I think that way the battery will be an important megatrend, just like the semiconductor has been in the past. And the chip manufacturers were not the ones that created the trillion-dollar valuations, right? It were the chip refiners, so to say, the companies that wrapped software and hardware products around the chip, that took the chip and made an iPhone out of it, right? Or a search engine, stuff like that. And I feel like with the battery, it will be similar, that the companies that are the best at taking the battery and creating amazing products and services with that will be those will be the most successful ones. And then it's a pretty simple calculation where you can take Tesla's long-term aspirations, maybe apply a haircut to that. Like, let's say they want to achieve 3 terawatt hours in energy output that they put into their cars and the energy storage and so on, maybe their bots at some point. And then they maintain, let's say, a gross profit margin, or like the gross profit per kilowatt hour that is stable or even rising in the future, then you can easily build up a valuation that shoots them into like multi-trillion dollar range, which I think, I don't think I have done it in this article, but I mentioned that in previous articles as well.
Right. Yeah. And I believe you had them selling, I think, 12 million vehicles in 2030. So a little short of their 20 million goal. But yeah, I feel like that's what we see with this company. They have these lofty goals, which I think it's great to set the bar high. And I think it ends with them getting much further than they would have with a lower goal, or like companies we see like GM who have a goal to sell like 50% EV by 2030, 2035. So even though they may not hit, these goals, we know that they're not great with timelines. I've got my Cybertruck shirt on here. Hopefully, this is actually the year for that. But I do think that it ends up with a lot more progress than the alternative approach.
Yeah, if you think about what they've said in 2013, they wanted, I think at that point they were at, I don't know how many vehicles, a couple dozens of thousands of vehicles per year, and they said they want to ramp this to 500,000 by 2000. And there were a lot of people, directly Farzad by 8 or 10 years ago, he put that online, the value of the company at 500,000 vehicles in 2020, and people laughed at him, and then they did it. So I believe it's fair to give this company a lot of credit because of the historical track record that they have achieved, not just ramping, but also ramping profitably. I think that's even more important. But still, yeah, you mentioned the 12 million. Maybe I can go into the next page. Yeah, I have them at 12 million vehicles built in 2030. And then that would put the global vehicle fleet at 44 million. It's just like for valuation purposes, it's just good to have some margin of safety in there. I don't think I want to build my investment decisions on them achieving such a ridiculously high number that would be twice what the car manufacturers that are currently having the highest market shares what they have. But still, I believe that the competitive environment in EVs is very different from internal combustion engines. I think just building out the supply chain, ramping, I think that is I believe that the demand for EVs at the right price point will exceed the production for a very long time. and that just makes the company that is able to scale profitably or cash flow positively the best. I think it will enable them to sell. They can always sell more as long as they get the costs under control, and they have shown that they can do that. So I believe that for the next 5 years or so, there isn't really a market share argument for me to be made. It's more about, can they grow production in line with like the demand curves at each price point, and then they can sell it. So and they're really like, they're so far ahead of many others. I mean, the Chinese companies they have pretty good products too, but I think in the Western world, the Tesla brand is just so dominant that it will be difficult for a company like BYD, for example, to compete with them in the US or in Western Europe. And so I believe it's that's why I picked 12 million. To have kind of the balance between being optimistic, giving them credit, but also not be gone overboard.
Right. And something you had mentioned there, I had noted, you said like the competitive landscape is different for electric vehicles. Why do you think that is? Do you think like just because this industry compared to ICE vehicles or internal combustion engine just is in its infancy, or is it because, there's fewer moving parts and the supply chains are simpler, or a combination?
Um, yeah, I think there's a couple of points that can be made there. The first is that if you look at a car manufacturer today, like a before Tesla entered this stage, those companies are basically engine manufacturers. I think that's what distinguishes them. All of these companies started as engine manufacturers, BMW, Daimler, and all these companies. Volkswagen was also founded by Ferdinand Porsche, who was actually he pioneered hybrid technology. So that's actually interesting. Like 100 years ago, he did hybrid technology. So that's not Toyota there that pioneered that, but actually the guy who founded Porsche and Volkswagen. And then on top of that, they just buy all the components. They wrap that around the engine, and then they have these big financing arms to put like to pump the vehicles into the end market. So basically, they are banks and with little product differentiation, with the built-out supply chain. And I think all these things will, I think, kind of like if you think about this like an intellectual property or like intangible asset that they have built over time, the engine, intellectual properties, and then the dealership networks and so on, and all these things over time will not be so valuable anymore, and then they are not really well prepared to play a big role in the EV space because in the EV will not be wrapped around an engine or an e-motor. It will be wrapped around a battery. So that actually makes the battery manufacturer, or at least the company that has battery technology or expertise, make them the natural winner in this space. And that opens up a big void that can be filled then. And we also have this big political push around the world that even if, I sometimes wonder, is the EV really better than the internal combustion engine in certain use cases? If you do like a long road trip, for example, I can imagine there's still people, or like many people say that the internal combustion engine will be better than an EV. Like range anxiety, I think, is real and is understandable. But the political push actually to get there is so strong that it's already decided whether or not the EV is better than the internal combustion engine. It doesn't even matter that much anymore because it's already decided what will be the dominant form of ground transportation in the future. And there's this big void there. And that makes it important that who can scale the fastest, who has the most ambitious program in terms of ramping up production. And I think Tesla is just so far ahead from that perspective that, I think this whole issue with customers, they want to have a choice and they want to they don't want to have the same car as their neighbor, for example. I think in such a new market where it's simply about how quickly can the production be ramped, I think that takes a little bit of a backseat, and it's more important to actually scale than have like a really big selection of products, and then over time as the market saturates, Tesla will then also offer different types of vehicles. It's actually amazing how they can sell like 2 million vehicles with effectively like 2 cars, right? So it's pretty amazing, and they're not even like, I would not buy a Model Y because I have a family and I need a bit more space. So I love that car. It's, I think first time I saw it was actually when my conviction was boosted instantly, because I thought that's exactly what most people want, this type of crossover SUV. But I think many people have different needs, and then they will be, at a later point when the market is more saturated, they will be satisfied as well.
And I think I believe in the past you had used the term when talking about like the legacy manufacturers that you called them systems integrators, was it? Like they're all merely just taking these parts that from all over and just really putting it together. Whereas Tesla came in and just vertically integrated this whole industry and kind of has set this new standard. Because I know even like in Rivian's last earnings call last week, I was reading through that, and kind of the same thing. Like they were just talking about how like vertical integration, trying to do more and more in house is kind of like the path forward and how they're going to make it work. And then you also tie into that. I was just listening to Joe Justice this morning, one of his old interviews, and he was just saying like how important that teamwork is, and that's one of the things Tesla has nailed is that like everyone's in the room working together, from the engineers to the product people to the even accountants or the finance people, and that's how you make the best product is when everyone is working together, versus like a lot of these traditional automakers, a lot is outsourced, a lot is contracted, and it's just there's no way you're going to make as superior a product when you're outsourcing all these different things versus everyone's working in house, working together. Even the way their factories are laid out, it's just an open concept. It's not like each department is siloed.
Yeah, I think, and we're very excited about that. It's definitely a key differentiator for Tesla. What sometimes almost amuses me a little bit is that I don't think they wanted to do that. I think they would love to outsource also if they could. But and then also that Rivian is made these comments as well. I think most of these manufacturers realize that building a car, building an EV is quite a bit different from building an internal combustion engine car. And because they're ramping this in this insane effort right now, this whole industry is being put upside down. Many things are not available. And so they have to actually do this, right? So that's actually the interesting part, that Tesla, it was a challenge for Tesla in their journey of growing into a mass market manufacturer. And then they took this challenge and made it actually a strength. And that is what many great companies have shown. Like that's a feat that many successful companies in the past have shown. I think, for example, a company like Amazon, I think AWS was invented because they needed a solution like that and nobody could provide it to them. So then they built this in-house, and all of a sudden it was good enough to sell it to other companies. And so I think that's, as you said, is a testimony to the amazing workforce and culture that they have, that over time will probably yield very successful outcome.
Yeah, definitely. And Tesla's kind of talking that way already, with who knows where things like Dojo goes, and just licensing things out. And yeah, it's just funny, like they've done all these things, like you said, not because they necessarily want to, but because they had to, because nobody else was doing it. And yeah, who knows, the opportunities and the doors that can open up as we move forward here. I'm glad you pulled up this chart here, because I think it's really interesting. I know you had kind of talked about how Tesla almost operates in a cycle here, where we might see, the margins and costs of goods and everything, not necessarily, now everyone thinks that the sky is falling, the margins are crashing, but that you had an interesting framework on this, that it might actually just be more of a cycle.
Yeah. So the Tesla flywheel that I know is demand again, and the cycle repeats, right? So that's basically over time how they grow. And you can see that here in this chart. This shows their average sales price and then their cost per goods of goods sold and their gross profit per vehicle over the last 4 years. And you can see that it trends down. And ideally, then the gray line here, the gross profit per vehicle, stays flat over time. And the kind of challenge here for them is, also for investors, is that this does not happen in a like a smooth process, right? Sometimes I think they unlock demand quicker than they expected, and then they can keep the ASPs higher. I think they did that in 2021 when the wait times were really ridiculously high, and they had to raise prices to manage that a little bit better because people would not want to wait for so long for a new vehicle, kind of detrimental to their business if they did not raise the prices. And then sometimes, and we've seen it over the past year, sometimes they have to cut prices in anticipation of future cost savings that have not happened yet to maintain their growth profile because they understand that they need to keep the pace of growing to unlock these economies of scale. Like they cannot stand still. And in this cycle, the gross profit is the residual that then fluctuates. And I think we got hit by that pretty hard over the past year. So a year ago, they made like $13,000-$14,000 in gross profit per vehicle sold. And now, as of the last quarter, this dropped to 7,000. And that is as low as we were the last time in the second quarter of 2020. And from this perspective, it's almost like Tesla is a cyclical company, just like any other cyclical company, just the trend line is just a bit steeper than other companies. And so sometimes growth stories or growth investing is then all of a sudden become cyclical investing as well. And I think it would have been a smart decision a year ago to say, well, this expansion of the gross profits is not actually a sign of like a structural shift, but it's more part of a cycle that will reverse and then take a little bit of chips off the table. But I mean, now we're all smarter now in hindsight, right? It's always easy. But then the question is, how will this continue going forward? And I think there's reason to believe that this will recover a little bit. We were now at a gross profit per vehicle level of 7,000, which is the last time they had that was when the Fremont factory was shut down as part of the COVID lockdown. So I think it seems to me that this is at a cyclical, like, I'm not sure if it's at a turning point. Maybe some people believe that it's already there. Maybe it will drop a little bit further. But I think they have a lot of tailwinds. Their factories are ramping. They will soon have their next generation vehicle that will unlock more markets again. So I think there's reason to believe that these gross profits per vehicle will stabilize or improve. And then I think because of Tesla's phenomenal operating leverage, this will hit the bottom line disproportionately. And that's why, by the way, I think at the moment, many people are a bit repelled by the stock because of valuation reasons. So they look at the stock and they say they haven't grown their EPS over the past year. They have all these issues, these challenges, product delays, and so on. And still they're trading at 70 times current earnings. But I don't think current earnings is a great value indicator for this company, a company that's growing that fast and will look so different, be so much bigger 3-5 years down the road. I think as a KPI, current earnings, it's always a problem using current earnings for Tesla. But at this point in time, at such a cyclical low, it's even more problematic to look at that indicator. So I think that set up a valuation-driven bear trap at the moment that will be resolved, I believe, over, let's say, the next 12, 18, 24 months.
Right. Yeah. I mean, that I think definitely can make a lot of sense. And just looking at the graph here, like you can kind of see it's fluctuated up and down over the last few years. And then obviously we've had quite an unprecedented, year 2022 and kind of continued into 2023 here, where like I know that it's not the whole picture that when you factor in the higher interest rates people are now paying on their car to finance them. But, that alone, we're talking about thousands of dollars. So the car, may still be close to the same price, but it's just Tesla's not collecting that income anymore because the interest rates are higher. But yeah, I think what you said makes a lot of sense.
Yeah, and the interesting thing about this is that this interest rate shock, I think, has postponed many car purchases that will eventually have to happen. The average age of the US vehicle fleet, and probably in other places too, is extremely high, higher than it has been for a very long time. Like the average age, I think, in the US of the cars is 14 years, which is quite incredible. And so I think there are structural reasons for that, maybe the cars are now being utilized maybe a little bit less due to urbanization and other trends. But I think there's also cyclical reasons there. We have the whole supply shortage story, and people are waiting for EVs, and they're like, okay, I don't want to buy another internal combustion engine vehicle because in 3 to 4 years I want to anyway go to an EV, and so that I think puts a lot of pressure there. And at some point, I believe there's two things that may happen. First is either interest rates come down, and then people think, okay, like I don't want to lock in a 7% car financing rate for 6 years because rates will come down or it's just too expensive for me. But maybe rates will come down to more reasonable levels where people are willing to pull the trigger, or they believe that these rates will just remain for longer, and then because of this backlog that's building up, they're doing this purchase anyway. So I think that current monetary policy is kind of hiding the fact that there are some cyclical tailwinds building up for these capital-intensive industries, automotive and then real estate as well, for example. That either people will just simply get used to them, or rates will come down and then it will unleash this demand. So, like I'm optimistic that this will demand for cars, in my opinion, will surprise positively over, let's say, the next 12 months.
Makes sense. And I think it's also important, like Tesla is still, as they said, they're prioritizing growth here. They still have a healthy amount of free cash flow coming in. They're able to fund everything. They've got a huge, cash balance sheet, somewhere around 22 billion. The company is well funded, whereas a lot of these other automakers, if times get worse, like Tesla's in the best position to weather the storm here. And I think that's all that matters in the short term. Like margins, as you said, they potentially can improve, but even right now, if this is the worst case, if it gets a little worse, they're still making it work, which no other EV maker can say that. No one else is making these EVs at a profit.
Yeah, sure. It's interesting in that context that the company that is the least levered of all of them is the most volatile in the stock market, right? I think they built that. I should have had it in my slides somewhere here. We don't have to go through all of this, by the way, but this was the final valuation that you alluded to in the intro. I think I have them building up like almost 400 billion in cash over the next 7 years, even with a lot of capital expenditure. So I have them here in 2030 at almost 30 billion in capex, because they have to build out the infrastructure. I mean, they're not guiding that long term, of course, but I can imagine that it will grow a lot from the current like 7 to 10 million of capex that they have in the future. So even with this fairly conservative assumption, I think they will print a lot of money over the next 7 years. And the beautiful thing about Tesla is there's no shortage of great investment opportunities at their hand. So you say it's all in $5 billion investment, and then it generates 10 times that in a year. I think at that scale, few companies in this world have such great investment opportunities at their hand.
Yeah, so now that we're here at the 2030, what is your projection here? We've got some numbers for revenue, gross profit. What do you think is like a realistic outlook here?
Yeah, so this is the summary from that article that you mentioned at the beginning. So I have them at so I have them at 830 billion revenues. About 700 billion of that would be just selling cars and energy hardware, and then 100 billion would be selling software and insurance, car financing, and so on. And then 220 billion in gross profit. And then throwing in some assumptions for like overhead costs, taxes, and so on, that would make them a company with 150 billion in net income. And just for comparison, I think Apple over the last 12 months something to 95 billion. So it would be handily. I don't know by then if they would already be bigger than Apple, because Apple will keep growing as well, of course. But they would be bigger by then than the Apple of 2023. And then here on the right side, you can see, so I called that a fleet-based business share. So basically, what do they do with services revenues instead of like just selling the product? And yeah, that revenue share I think will grow to 10-15% over the next 7 years. Um, and yeah, the gross profits, because the margins are higher on these businesses, I think 20-25% of their gross profit will likely come from these sources. Yeah, and then if you apply like a 30 times multiple to that, which I think they will keep growing by that point in time. It's just the company's nature is that they always want to grow. And Elon will still hopefully be around to have ideas how to grow this further. But at the same time, I think at some point the growth curve has to flatten. So if let's say today it would be reasonable for them to trade at 50, 60, 70 times earnings. By then I just chose 30. That would put the equity value to 5 trillion. And if we have a bit more dilution, then the value per share would be 1,200. So this is, I know these numbers look ridiculous. Just want to point to how the company looked like 7 years ago. So now 2023, how did the company look like in 2015? I think if in 2015 or 2016 somebody would have said what they do this year, people would probably also have called that crazy. Just if the company is on these exponential growth curves, then it's just over time just builds up like that. And I believe that hopefully, like when people check that out, maybe on my website, hopefully they will view this as both optimistic and prudent. We have a bit of margin of safety in there too, but obviously we have to have some optimism, because if you want to build a bull case, you cannot assume the company to like significantly underperform expectations from here, right? You have to believe in the story. So I kind of have a kind of balance between like optimism and being a little bit conservative as well.
Yeah, and that's so that's what I really appreciate about your work is I like I said, like I think we're both kind of like grounded Tesla bulls. Obviously we're pretty big bulls, but you know, I don't really factor in something like robo taxi. Like I just feel like if it happens, fantastic, but I just feel like we can't project out for that. Whereas this, you know, is like a realistic, like you've got here upside almost 400%, almost a 4x, and this is just they continue down the path they're on right now. We start to get some marginal contribution or more meaningful contribution from things like energy, insurance, full self-driving take rate going up. So, you know, this I like this kind of outlook. I think that, and like you said, it's 30 PE ratio. Obviously, it could be anywhere. It's been as high as 80 or higher, but you know, it kind of gives you, I think, a reasonable outlook on the potential here. And if they surprise to the upside and they really kill it, won't be mad.
Yeah, for sure. And we've mentioned the software a couple of times already, and that I don't value robo taxis. Maybe it's worth it for your viewers also to look at how do I actually look at software if I don't look at robo taxis. So I do believe that FSD is already a great product today in its current shape as a, let's say, a supreme driver assist program, right? I think, and as they're developing this quickly, and over time, this will then the utility of this will rise rapidly, and it will be rolled out into more jurisdictions. It will not be just in the US forever, right? They will move this to Europe and other places as well. And then I think over time the take rate increases, and the price will also increase over time as well. And I think they haven't increased the price for quite a while, but they also have not dropped it, which I think it could be bearish on that, but in my opinion, it's also a sign of confidence that they believe they can deliver on this product soon, so they don't want to sell it for cheap. And also, I think what they want to achieve is selling more subscriptions in the future, not just selling the license like standalone. And compared to, let's say, other companies like Waymo, for example, or Cruise, this business is already highly profitable for them, and we just don't see it yet. So I calculated based on take rate assumptions that Troy Tesla, for example, publishes sometimes, and then the price that every quarter that the price of FSD was. I think that's a fact that we know. the Troy test-like information, the take rate is an assumption, but we can kind of triangulate that with I think Elon's comment earlier this year was that 400,000 vehicles are on FSD now. So we have pretty good confidence on that. And based on that, we can calculate what has been the true revenue, the real the cash flow that the company has achieved. Because they're not putting all of this in their P&L, because for accounting reasons, as long as they sell a product that's not yet done, it's not yet completed, they're still developing it, they cannot recognize the revenue. But the true revenue, the cash flow, that's real, that's cash that they get. And I think that's already close to $1 billion probably, with costs that are probably much lower than $1 billion. So this is money making for them already today and growing rapidly, as you can see here on this top right chart. And then on the bottom right chart, you can see how this true revenue in the blue exceeds the recognized revenue that we have, that we can infer from their financial disclosures. So barely half of that is actually being recognized. And the orange line here, by the way, includes other deferred revenue as well. So it's not just the FSD. So most of this, or like a large part of this, is not in the P&L, but it from an accounting perspective, it's not in there, but from a valuation perspective, I think it's fair to include it. And that could easily be another 10 cents of EPS, which is like 10% of their current earnings per share. So it's not a lot, but it's also not completely immaterial. And then I said, okay, if they have 35 million vehicles on the road in 7 years, and let's say a quarter of them will take FSD, that will be 10 million units. And then my assumption was to simplify the valuation a little bit. I just assumed all of that to be subscriptions. And I wrote an article about that a couple of months ago. You can either assume all of that will be sold, all of that will be subscribed to, or a mix. From the ultimate valuation, it will not make much of a difference. So I just assumed here for simplification that this will be all subscriptions. So if this, let's say the subscription fee by then will increase to 4,000, because the utility will improve and so on. There will be more awareness of the benefits. They can, I think, generate like $40 billion in revenues with this. The margins will be phenomenal. So that's 35 billion in gross profit. That's how I built that up. Could probably argue that it's an optimistic scenario, but it's far from the super bull case. I think it's helpful probably for your audience to also get some insight on how I'm actually looking at it. What is the software revenue if there are no robotaxis, right? And so this chart here, we can see what the true revenue run rate of FSD is. So we cannot see that in the income statement because some of that is deferred revenue, but we can infer what the revenue is if we just look at the average the price per quarter of FSD, and then also what the take rate is. And there are some people for a test, like for example on Twitter, and then also some comments from management, from Elon, that there are 400,000 cars out there. So we roughly know what the take rate is every quarter. And based on that, we can infer what the revenue is. And that has been $1 billion over the last 12 months, effectively. And it's highly profitable for Tesla, which is a stark contrast compared to the other autonomy players out there. And as I mentioned before, we cannot see that in the income statement because half of that is deferred, because they have not yet delivered on the final product. That's why they cannot book the revenue yet. You can see that here on the bottom right chart. The true revenue that I calculated, or is the blue column here, $1 billion, and then the actual recognized revenue is just half of that. So if they were able to recognize all of that revenue, which I think, even if it's not okay from an accounting perspective, it's definitely fair from a valuation perspective because they're getting this money, and we assume that margins are probably quite high. I think this can easily be like 10 cents in EPS. That is not yet right now in the income statement. That's just dormant in the balance sheet. So it's not a lot, but it's certainly not nothing at a time where the total EPS for the company is I don't know, $3-4. So it could have an impact, and the impact will likely increase over time. So I believe that if they have, let's say, I don't know, like 30, 40 million of vehicles on the road by the end of the decade, and 25% of that would subscribe, that would be 10 million cars. And then I assumed a subscription fee of $4,000 per year. And you could calibrate this just as subscriptions or just as hardware sales or as a combination thereof. And I calculated that in one of my articles that valuation wise, it would not make much of a difference in the end. So I just, for simplification purposes, I just assumed here just subscriptions. So that would be more than 40 billion in subscription revenues, and margins would likely be very high. So I think this can probably make them like 30 billion or more in gross profits by the end of this decade. Because over time, awareness will increase, it will be rolled out to additional jurisdictions, the utility will improve. So even with, I think from my, I imagine that the future will unfold much more gradually than this revolutionary wake up moment of the fleet and we all of a sudden have robot taxis. I think it will happen more gradually, and this is where I see it by the end of this decade. It will have grown much more from current levels.
Got it. Yeah, I think, and like you have here, this is with an FSD take rate of 25%. 1 in 4 people. I think that if they can deliver on it, I mean, I think that's super realistic. Just thinking of the use case between maybe old people and people who can't drive at night, stuff like that. It's so useful. And then not even to mention that I think we're getting to the point where, people today might not realize, like I have a lot of friends I'll talk to and they'll be like, I like driving. Like, why would I want this? And I just think it's something that people don't realize the utility value of. And one day, again, if they're able to really deliver on this, a full self-driving software package, that it would not make sense for people to drive themselves anymore. So, but this is just 1 in 4 people who would even opt in for it, to give you guys an idea, which I think is really interesting.
Yeah, and this technology will not stand still, right? It will not be like this. It's evolving rapidly, and I think more and more people will probably see the. I find it pretty exciting. If I had a Tesla, I would definitely buy it with this functionality. I think it's just mind blowing that a vehicle, even if you sometimes have to take over, but the fact that it can handle many situations alone, even like turning and so on, left turns is like, I have problems with left turns sometimes, right? If you don't know whether you can drive or not, on a busy road. But yeah, it's just fascinating that it can do that simply with like vision-based AI. Yeah, it's just like, I think it's the most ambitious real-world AI program out there. And by the way, even if let's say they hit a dead end, or not a dead end, but if let's say the path is much longer than we all hope, I think there will be commercial solutions coming out of this, because it's such an ambitious program with so much data collection, with so much investment, like Dojo and so on, will accelerate this. I think it's just very exciting as a project. And Tesla is known very well that they have always the commercialization focus that other companies, I think if you look at Google or maybe Facebook, they also sometimes they act a little bit like universities. They do a lot of like groundbreaking research, but I think Tesla is often at the forefront of when it comes to actually delivering a product based on the research that they're doing.
Yeah, I agree, and I'm with you. Like, if I bought a Tesla, I would definitely get the full self-driving. One of my other questions, which I think you may have just answered, was going to be, who do you think is the leader in AI right now? And that's kind of how I think about it. Is like, I don't really know who else is bringing AI to the physical world like this besides Tesla.
Yeah, well, if you so a lot of the AI theme right now is about training chatbots, right? And I think it's impressive if you think about ChatGPT, for example. I think it makes a lot of mistakes as well, but people are more forgiving for some reason. If ChatGPT tells you some nonsense, okay, it's just an AI that's learning. But I think, well, maybe it's also it's fair to be a bit more critical on Tesla FSD, because it can kill you if it makes the wrong decision, right? But still, I think it's the principle is the same. They're both learning in public. The exciting thing about it is they're learning like a human would learn, like just predict like the next word or the next frame that you have based on which you have to then make a steering or a braking decision. Um, so I think there are many companies right now in this digital space, but then I think the most, for me, the most exciting part of the story is like what will liberate this artificial intelligence from cyberspace to real space. So I think intelligence has to come with the ability to like manipulate your real environment, right? Otherwise, it's nothing more than software that's just in the internet. What differentiates, let's say, an LLM from, I don't know, Microsoft Excel or so can also make great things. So I think the exciting thing for me is what will then happen when these methods will be applied in the real world. And it seems like there is no other company right now with similar ambitions. We have the Boston Dynamics, but nobody knows what's actually behind the scenes there. Like, how are they training these robots, or are they just like programming them by hand to do these things, which is still impressive, but probably not that useful. And then you have companies like Google that probably have great software, but we don't know how far they are in actually getting a generalized AI solution out there, like the humanoid bot that Tesla is developing. So we don't know. And like Tesla, when did they announce like the semi or the new roadsters, like 6-7 years ago? So it takes forever once they have announced something. And Elon basically announced the robot when there was just a guy in a suit. And so it will take probably a long time, but I definitely see Tesla in the leadership position there. That's hard for me to imagine if someone to bet on the liberation of AI from cyberspace to real space, if that ever becomes an investment theme, I don't know what else you would want to buy than Tesla.
Yeah, I think that makes sense. And I know Amazon CEO Andy Jassy recently was on CNBC, and he basically said he thinks with AI right now we're kind of in the hype cycle before the substance cycle, and that's kind of the category you could put all these chatbots and LLMs in. You know, they're great and all, but it's not a car driving itself. So I definitely think that's more exciting. I know we're coming up on time here. I want to be respectful of your time. I don't know if you want to finish these slides, or we could save it for another time.
Um, yeah, I mean, if you have any other question right now, I think all these slides together are probably too much to cover them in one
Okay.
conversation. I just wanted to have them handy for us to discuss. I think we covered most of the important aspects. If anyone of your viewers is interested into, I have dedicated articles out there on the insurance opportunity, on the finance opportunity, on the energy business. Yeah, I just have they published a lot of research on this company over the past year, especially at the beginning of this year when the stock, or at the end of last year, mostly when the stock came down so hard that I tried to make sense out of a situation that didn't make sense to me. So I was very busy with Tesla at that time to strengthening my thesis there that I could continue to own this and even buy more of it with conviction.
Yeah.
But yeah, I would keep covering this. If people are interested in following that, subscribe at fallacyalarm.com. I also have a Twitter account that's quite active. And, yeah, it's basically my summary of the current situation.
Yeah, I'll definitely link to Renee's Substack and Twitter down below. You guys could find it in the description and the pinned comment. Highly recommend you check it out because he goes into great detail, just as we did here with the full self-driving, but just on everything from insurance and the energy segments down to every granular detail of how much EPS each of these segments can contribute. But thank you guys for tuning in. Thank you for coming on here, Renee. It was a pleasure having you. And I think you bring so much value and a unique perspective on not only Tesla, but also the broader markets and the other companies that you write about.
Thank you, Vinny. Yeah, thank you for the invitation. It was great to be here.
My pleasure.